You ever see a headline where a company's profit just explodes like 500% in a single year? It really makes you stop and wonder, right? What on earth happened there? Is this company an absolute rocket ship, or is there maybe a little more to the story? Well, today we're going to find out because we are unpacking the incredible 2025 results for Thakral Corporation. And we're not just pulling this from headlines. Nope. For this explainer, we are going straight to the source, the company's official, Deloitte-audited financial report. This is the real deal, where we can find all the details hidden behind those massive numbers. Okay, so let's get right to it. Let's start with that headline number, the one that really got everyone talking.
And there it is, over 174 million Singapore dollars in profit. For the year. I mean, just let that number sit for a second. It's huge. But a number this big, well, without any context, it doesn't really tell you the whole story, does it?
And here is where it gets really wild. This comparison puts it all into perspective. In 2024, the company made a very respectable $34.9 million. Then, in 2025, that number jumps to $174.2 million. That's a five-fold increase year over year. I mean, that's an absolutely staggering leap. So, this is the big question. For any investor, this is what you have to ask. Did this jump come from a booming core business, or was it something else entirely? Is it something they can do again next year? That's what we need to figure out. And you know what? The annual report gives us a really clear answer. The story behind this number, it really comes down to a one-time event, or to be more accurate, two of them. And here we go. This is the aha moment. This table, which we pulled right from the financial notes, it shows everything. So the company had investments in two other companies, GTH Group and TBTG, and both of them had what's called an initial public offering, or IPO. When that happens, the crawl has to revalue its investment based on the new public market price. And that created this massive paper gain of almost $174 million. Now, when you see it visually like this, the impact is even more clear. Of the $174.2 million in total profit, a whopping $173.8 million of it came from that one-time IPO revaluation. You see that tiny little slice? That's the profit from all of its other day-to-day operations, about $400,000. So yeah, this was definitely a very special year. Okay, you might see this term FVTIS floating around in the report. It stands for Fair Value Through Income Statement. Look, all it really means is that when the value of an investment like this changes, that change has to be reported directly as profit or loss. So when their private investments went public through an IPO, their value just skyrocketed on paper, and that paper gain had to be reported as profit. It's just an accounting rule, but it's a really crucial one to understand what happened here. So because that $174 million gain was a one-off thing, a smart investor has to look past it and ask a different question. How is the actual underlying business doing? You know, the nuts and bolts of the company. Let's just park that massive gain to the side for a minute. Did the company actually grow its core operations? Did it sell more stuff? Did its revenues actually go up? This is the real health check. And the answer is a pretty definite yes. Revenue growth was strong pretty much everywhere. I mean, just look at Australia. It went from just S6 million in 2024 to over S52 million. That's huge. South Asia grew from S152 million to 194 million. And China saw some really healthy growth too. This tells us the day-to-day business has some serious momentum. In total, the company's revenue climbed to over $411 million for the year. That's a big jump up from about $289 million back in 2024. So yeah, while the IPO gain totally stole the headlines, the core business itself was firing on all cylinders. And that is a very, very positive sign. But hey, a good analysis isn't only about the good news. The financial report also has to spell out the risks. So, what does the company tell us that we need to keep an eye on moving forward?
The report points to three main financial risks to watch. First, interest rate sensitivity. Basically, their borrowing costs could go up. Second, since they operate all over the world, foreign currency fluctuations can always mess with the results. And third, a big chunk of their investments are in Japanese properties, and the values of those can be pretty volatile.
And this quote, which is pulled straight from the report, makes that last risk very real. They're basically saying that just a tiny 3% change in how they value their investments could swing their pre-tax profit up or down by over $11 million. That's a huge sensitivity, and it's definitely something for investors to keep on their radar. Okay, so we've seen the spectacular headline, we've unpacked it, we've checked on the core business, and we've looked at the risks. So let's put it all together. What is the real takeaway here for an investor? Well, there are really two stories to Thakral's year. On one side, you've got the headline story, a blockbuster profit, almost entirely driven by a one-time IPO windfall. But then, underneath all of that, you have the core story, a fundamentally healthy business with really strong revenue growth, but one that also comes with some serious financial risks that need to be watched pretty closely. And that really leaves us with a big question for the future, doesn't it? The company proved it can make some really smart investments, but that $74 million gain, that's in the rearview mirror now. The challenge ahead is whether that impressive growth we saw in their core business can carry the company forward all on its own. Now that is the story to watch in 2026. This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.